What's up, guys? Outhenticfx here. Hope you guys have been having a great trading week. I've just basically come up here to just share with you what I've been seeing for the week ahead, what I'm looking at. So we're gonna just basically start off with the markup that I sent to my private Discord on the dollar index. From there, we'll go down through the pairs, analyze gold as well as a few indices as well, and then from there take it from there. So anyway, as you can see, this is the weekly time frame, right? We've got our weekly range here on the dollar index. So as you can see from the previous range that we were in, we broke structure to the highs on the left here. We can see that we clearly are making a retracement after taking that buy side liquidity out. So we've got our weekly low and our new high, right? So now the whole concept, or what I'm looking at, is two things. It's either price needs to break the weekly low to confirm bearish momentum, to come mitigate the order blocks or the demand zones which we have in these regions over here, right, on the weekly time frame. We can clearly see that we had this big displacement to the downside, breaking structure and clearing all these sell stops to the left side. And then from there, we see that we left a large amount of imbalance, which is our fair value gap. And also the fair value gap, which caused price to expand, creating our new weekly range, was caused by this fair value gap on the left side here. So basically, we mitigated the imbalance. Price came in, pushed up, took out this high on this candle, right, which was probably around the beginning of January, right? And then from there, now we can see we are having a nice retracement. So this is basically the weekly time frame. So to get into the daily, right, as you can see in the daily, as we start on the left side, we can see that we've been creating lower lows and lower highs, lower lows and lower highs, leaving points of premium fair value gaps. And then from there, we also see that price has been leaving space for a retracement up, right? We see that we have buy side liquidity that needs to be swept, which are on these highs here, right? Buy side liquidity rest, because as you know that whenever we get position traders or traders who hold for a long time, they put their stop loss or trail stop loss above these highs as they ride price all the way down. So this is our weekly low on the weekly time frame. But since we are in our daily range right now, we can clearly see that we took out the sell stops here. I mean the buy stops on this high. What I'm looking for is on the daily time frame, if price breaks 180.20, we will look for sells around 104, which is around this region here within this bearish or bullish order block, right? Bullish order block over here, for continuation to the downside, right? So basically, if not, we are going to be looking for an impulse up, because price has come into this bearish order block on the weekly low, right, and filled imbalance or our fair value gap within this region. So if price holds this area as support, we will then see a expansion to the upside, retracement, and an expansion to take out the buy side liquidity that needs to be swept and fill either our premium fair value gap or extreme premium fair value gap. So between these two would be a nice daily target to consider when going in for buys, right? But right now, due to all the news and all the speculations that are going on with the dollar in regards to multiple countries leaving the dollar index and creating their own currencies and uniting, we might see a further downside move. But anyway, we need to be prepared for anything at this point. So yes, so in terms of if price respects this area as support and continues up, we then if we then will be looking for the following. So if price fails to break the low at 180.20, we will see a clear support for price to push up to 109,900 to mitigate and sweep buy side liquidity, then a potential reversal. Stay tuned for any major news, guys. So this is the daily time frame. I've also got a analysis on the 4 hour, right, which is currently where we stand. So if you can see on the 4 hour, this is our weekly low over here, right? We can see we had a nice impulse retracement, creating liquidity, impulse retracement, impulse retracement, impulse, right? We've reached our high, and then suddenly, once we swept liquidity to the left side, right, creating which is the high over here, right? Once we swept that high, we broke structure to the downside. Once we broke structure, we can see that we left a supply zone here. This is a clean displacement, right? To the downside, we left supply, which we mitigated. After mitigating, it created a extra expansion to the downside, coming into our order block, which is this zone here on the daily, right, which created the impulsive move to the upside. This bullish order block here, bearish order block, is responsible for this correction to the upside, right? So as you can see right now, price is respecting the current demand zone, right? This is an analysis I did last night, so we are gonna go into the live markets right now and check everything else further. So we can see that we currently are still playing within that demand zone. We can see that we did spike a bit down to fill the imbalance over here, right? We can see that I just didn't mark that up. And now all we need is to see price push up, break structure to the left, right? High needs to be taken out to confirm new bullish trend. Why am I looking for buys? Because price has been exhausted right now, right? So it's either two things. It's either we break the low, or we start breaking these previous highs, taking out buy stops, because we can see this is basically trend line liquidity which needs to be swept, right? So if you put a trend line here, we can clearly see that price needs to push up. So if that doesn't happen, right, we are going to see a push down. Price will take out the weekly low. Once it takes out the weekly low, we will see a reversement or retracement within these areas here or these areas here for a continuation down, right? Because besides the liquidity that rests above here between these equal highs, we have a clean area here of imbalance. We have a nice supply zone over here. And then from there, we can continue all the way with the trend to the downside. So let's get into the live markets right now and see what has happened throughout the entire night. So as you can see here, the weekly is bearish, daily is bearish, H4 is bearish. So since that whole time frame is bearish, we aren't looking for bullish momentum as of yet, as structure is not confirmed. So to get into it, on the 1 hour time frame, let's see what we have. So on the 1 hour time frame, we can clearly see that we've taken out the Asian high over here, so which means price doesn't have any need to come up because we've already taken this high. We've taken the Asian low here, which occurred on just before market open on the 3rd on a Monday, right? We had a nice impulse move to the downside. This is our 1 hour time frame. We've got our nice fair value gap over here, which could be a nice potential target for price to come down, right? We broke structure to the left here, right? Broke structure to the left. And then from there, we had a nice extra impulse move. Currently, right now, we're filling the imbalance within this area here. Filling that imbalance. So what we are going to look for is basically for price to take out the following: the buy stops that rest above here, come through, mitigate within this imbalance, and then we can possibly look for sell, right, into the demand zone that is created. So probably the fair value gap that's here, we can look for that, or the demand zone. Yes, the demand zone that is created. So we're gonna just predict price right now and just look out for the following. So it's our fair value gap. So basically a break of structure, retracement, price enters that fair value gap, right? Or we can see that we have another fair value gap resting above here. either one of two, and then come back down, right? So that's a nice trade setup that we are going to be looking out for. Our stop loss obviously will rest above the previous high of the candle, which is about 16 pips. If you want to play it safe, you can put it all the way to 30 pips, right? 30 pips or even 40 pips, depends on you how you place your risk to reward, but this is good risk to reward. So for a 1 to 3 risk to reward, that will be about 30 pips if I'm not mistaken. 30, not 25 pips, around 25 pips, right, to play it safe. So that's what I'm looking at for the daily. I need to see price break the high to the left, right? Break of structure, boom, retracement, continuation, and then displacement to the downside. We've already taken out the Asian low, right, from yesterday, this week. We're pushing up now. We can clearly see that we are still in Asian range. If price comes down and takes out this low first, that means we are going to tap into this zone and then push up. That is a high possibility. If not, then price is going to take out the high of the Asian range, right? Coming into this supply zone over here. Mitigating the supply zone, either respecting it. Once it respects price, once it respects it, continuation to the downside, or price is just gonna disrespect it, break structure, retrace, and then expand, and then another displacement to the downside to continue to take out liquidity, which is resting below here as well. That is liquidity resting there below, guys. So we are going to just wait on that, and that's clearly what I'm seeing on the dollar index. So to get into it, we're gonna go now to GBP USD. Let's start off on the weekly time frame on GBP USD. I've got my small markup here. So to not make things complicated, we can clearly see that we have an expansion, right? Don't mind all the dots and all the markups. I'm going to show you what I am looking at. So we have a break of structure to the left. We can see that we had a small retracement, right, and then another expansion. We left daily liquidity above these two highs, right? So there were daily liquidity here. We currently swept that daily liquidity, right? We swept that daily liquidity to the highs, and then to get into the H4, right? So we've got two things that are happening right now. I'm not gonna go into detail on the markups and everything, but these are just zones that have not been mitigated. I'm not yet looking for entries on them, but the current move, we can see we have a nice expansion. We broke structure to the left, right? We swept liquidity as well, right? We have that nice expansion. We have a H4. This is the H4 fair value gap, which is still not mitigated. As you can see, if I jot down to the 1 hour to make things more clear for you, we are bullish weekly, daily, and on the 4 hours. So we have 3 time frames in sync on GBP USD. So this is the 1 hour time frame. So from our expansion, right, we always look to get in within or below the 50% equilibrium of price. As you can see right now, this candle has swept the imbalance here. So we don't need to look at the zone for entries anymore. So there's 2 things I'm looking out for, right? It's either for price come into our demand zone over here, mitigate that zone, and then continue to target the highs, right? Or for price to come down, mitigate the imbalance, and then come into this demand zone over here, right, within these regions, tap in, and then push up, right? So I'm looking for these 2 types of moves currently on GU. This is my setup. It is Thursday currently. Right now, New York time, we are around 2 a.m. New York time on a Thursday. So I will be updating my private Discord on these trade setups, but this is currently what I'm looking at. The reason why I am still bullish on the 2 pairs is because we are bearish on the dollar index. So to get into the next pair, which is euro, right? I'm just gonna go straight to the 4 hour actually, and just show you what I've been looking at. Okay, so on euro, you can currently see that we have a nice expansion which came into this fair value gap over here, which is the one that occurred on the 1st of Feb, right? We can see we have our daily high right over here. We still have a unmitigated supply zone in this region, right? I'm not gonna go all the way back, but just to show you that on the daily time frame, this is the unmitigated supply zone. This bullish order block caused the break of structure on the daily time frame, as you can see, and this impulsive move. So we are feeling the imbalance. We are possibly going to come into the bullish order block. Obviously, you can refine it on the lower time frames, but right now I'm just looking at it for a future zone because we aren't really close to it. And considering what could happen on the news and everything, we might just take out this high and then just continue either down or continue up. So we are going to just wait on the news and see what happens. But in the meantime, to go back to the 1 hour time frame, same as GU, right? Same as GU. We can clearly see that we have a nice demand zone over here, right? We have liquidity resting here, liquidity which is currently being swept. So a nice trade setup on Euro USD actually could play out right now as we speak, because price could come in, sweep the lows of Asian range, get into our demand zone, and then further push up, right? The reason why my stop loss will rest below this candle is because we've got imbalance here, which price can spike a bit into, come into, and then push up. The reason also why it's very important for you to have your fib, right? Let me just place my fib here so that you can see. The reason why it's also good for you to place your fib around your new expansion is to see your areas of interest. As you can see, I've got a demand zone over here just below the 50% equilibrium, which is discounted, right? And then we've got a nice imbalance or fair value gap within this region, just below our 79% level, which is basically an extreme premium level, which is actually majority of the times a good zone to look for entries. As you can see, I'll show you with this expansion that we have here. If you can take your fib from the high to the low, we can clearly see that our 69.5, between our 69.5 and just below our 50% is a good area to take trades from. So we can see we clearly had this nice bearish order block which was resting above here. You can see price came into it, mitigated it, and then from there suddenly just started pushing up. So if you were to enter on this trade, this would be actually a beautiful trade setup. Your stop loss either just below the wicks here or even here, you know, any way you choose, and then you just target the highs. You would have clocked in about 130 pips on this trade. So not to get into too detail on that, this video is just a small brief summary for our YouTube video. So anyway, once we get into price here, we are going to be targeting the highs at the 0.27 level. Obviously, we have our take profit 1 at the highs, which is the 0% level, and then the 0.27 level will be our next take profit. For us to take out this high and then continue down, or we just catch the next demand zone that is built here. So let's just see how price reacts to that as we go forward. So these are the main currency pairs that I'm currently trading, but just to add another one there for you is GBP JPY. I know you guys love GBP JPY, so just let's quickly browse GBP JPY and see what has been happening on GBP JPY. From the daily time frame, we can see that price has been going through a whole consolidation phase, right? So we back and forth between the highs, which is our premium level, and the discounted level within this area. So to mark up our range, right, we've got our low here, right? This is the range we're playing within, guys. This is the range we're playing within, and then from there we've got our 50% level around here. So our 50% level will reside around here. So if we go from the high to the low, we can clearly see that this is our 50% level. So around this level is where we're gonna see a lot of momentum or spikes within the market. So we've got our weekly range. This is our weekly range, right? So I'm sure if we can go on the weekly time frame, we'll see it a bit clear. Let's see. Okay, cool. We've got our weekly range, right? And then we've got our daily range, which is our current expansion, which is this one, right? The reason why I'm choosing this one is because we broke structure, right? Whenever a structure is broken, a new range is formed. So as you can clearly see, right, we had price coming up from this low, creating a high, creating this new low, and then when you had a new high over here, low, high, low, high, right? So the reason why I'm not considering it as a high low and a swing high, a swing low is because it's microstructure within this range. The swing points or the main areas of structure will obviously be this area here, creating this low, lower high, lower low, right? And then we can see within this range, price was ranging from this low, boom, to this low, this high here. We only broke out here, right? Creating a new high, low, higher high, higher low, higher high, right? So as you can see that we've got 2 points of areas of interest that we are looking at, right? We've got price coming down, we broke structure to the downside, boom, and then now all we need to do is look out for our price point. So since we broke structure, we can see this is the daily time frame, multiple weeks. I'm sure this was caused due all the news that was been happening. Get back into it. The reason why we are pushing up within this new weekly range after sweeping all the sell side liquidity is because price wanted to come into this supply zone and fully mitigate the supply zone, right? You can clearly see that we have this nice bullish order block that caused the displacement to the downside or the expansion, however you want to pronounce it, creating that move. So right now we are gonna go into the 4 hour. Let's not do too much on the daily, let me not confuse you guys. So once price gets into this zone, right, we ask ourselves 2 questions. If we move price all the way to the left side, why did price want to come into the zone? Because the refined order block is this one here, right? So we can clearly see here we didn't quite tap into it, but here we did, which is a beautiful thing. So this is the 4 hour, right? We can mark up now our high, our low, and then we have a high and then a low, higher high, right? You can clearly see that we broke structure to the upside, boom, broke structure, came in, mitigated, left a nice beautiful inside pin bar, and then we broke structure, right? So once we break structure now, there's 2 things we need to look out for. Our fair value gap, boom, our fair value gap, as well as our areas of demand, right? Our bearish order block or bullish order block in this case, since it's the one that caused price to go down. So we have it here. I'm just gonna mark it up like this, OB, because this bullish order block caused the expansion to the downside. As you can see now, price came into our fair value gap here. Price came into our fair value gap here, mitigated it. Now we can see that we are currently retracing, right? And in terms of considering a area of interest for us to look for the buyers to go into, we can just take our firm from the high until the low, and then we can clearly mark up the following. We mark up a nice, I like this demand zone over here, right? Can mark up this entire demand zone over here, and also we can mark up our fair value gap that we have here, just so that we know that price needs to mitigate the zone. And then we have another demand zone over here. So we've got two demand zones that we have, right? And then to jot down onto the 1 hour time frame, we can clearly see that right now we're not in an area to buy. We should be looking for sells because price is retracing into the zone to just come all the way back down, right? So we are looking for that right now. So in this case, I'm going to remove that. I'm going to focus on this area here, which is our imbalance on the higher time frame. So this would be a nice demand zone. Obviously, depending on the time frame, price reacts differently. So we're finding this. I'm going to use that order block there, and then just wait for price to come into our zones and areas of interest. And then in terms of looking for a continuation to the downside, we can see that price hasn't taken out this Asian high over here. So all we do is refine our fair value gap over here, right? Have price create this move here, have our stop loss at the highs, have price push all the way down. We remove this order block, we focus on this imbalance here. If we put our what you call it, FIB, we can clearly see that this is our premium level where we can look for sells. So anyway, all we're gonna do is have price come into this zone, clean or mitigate the fair value gap, and then we can see a continuation to the downside, right, for extra 300 pips. So that's just my analysis on GBP JPY. Nothing hectic. So USD CAD, the only reason why I have USD CAD here is to focus on the trend, right? So basically I know if USD CAD is going down, right? USD CAD is going down, that means GBP USD is going up and Euro USD is going up. As you can see, if USD, let me just show you quickly. If USD CAD is bullish, the rest are bearish, right? If they are bearish, it's bullish. So it's just like extra confluence just to just see with the trend of price, and then go follow through from there. So just to get into S&P 500, S&P 500 is looking beautiful because right now we've mitigated our supply zone to the left, taken out all the sell stops. We still have this nice zone. So right now what I can do is we can remove this since that's mitigated and focus on this area at the highs, right? Focus at these areas at the highs for our fair value gap. This is the daily time frame. We currently have mitigated our order block, right? You can clearly see 3 days or Monday's or Tuesday's candle has mitigated our order block that occurred on Wednesday. And to just get straight into it, on the 4-hour time frame, we have a nice setup occurring currently. So anyway, we've got our minor microstructure breaks of structures, right? We can clearly see that price has been getting mitigated and so forth. We are looking at price to take out these equal highs, which it did. We now have this bullish order block, which price currently is in. We see a small retracement to the downside. We have multiple areas of liquidity that is resting right between these areas here, which in our books is not a place to sell. We want price to sweep that first. Once we sweep these areas at the highs, come into this fair value gap, we can clearly see that, okay, cool, now we're ready to continue with sells. So what I'm looking at right now on the following price chart, which is the 4-hour, is for price to just retrace into our demand zone and then continue up, or have a larger expansion to the downside then continue up. We can clearly see that this expansion that we have here is currently showing us the momentum that price wants to be bullish. So we can clearly see all these candles here, all these bullish candles are pushing up quite heavily. So that's all I'm looking at for US 500. I'm just looking for a nice retracement below our premium, our equilibrium level into our discounted level for a continuation to the upside. And then from there, at the same time, if that doesn't play out and price continues down, we are going to first take out all the self stops, right? Because we do have trend line liquidity resting here, right? So the whole concept of this is to just make sure that when price comes in, we mitigate and then push up, right? If we have price coming all the way to clean all the areas of liquidity, then we'll just have to wait for a new direction or bias. But that's what I'm looking at right now on S&P 500. When it comes to gold, gold is looking very interesting. I'm just gonna start off on the 4-hour gold, or we can just go to the weekly time frame so you can just see the weekly bias of everything. So gold actually is very simple. You can clearly see that we still have our highs at about 2076, right, which we need to take out, and we have our this is our monthly range, weekly range, and then we have a daily range, right? So when we go to the daily time frame, we can clearly see that we've just taken out the highs at 1959. Broken structure, right? Broken structure to the upside. We've taken out our buy stops that rested above here. We are currently within the zone here. So to go on to the lower time frame and find out what is in these zones is a key, because from here we just see a sudden push to the downside. So we have a reaction with this, our evening star here, and then we have a nice start of the day. Price is bearish right now. So if this candle closes bearish, we might see price retrace a bit and then continue to the upside. But to get into it on the 4-hour time frame, let's just mark up our structural points, have our areas of imbalance filled. We can just delete everything quickly. Let me just delete that, we don't need that, right? So we'll just have our weekly range, right? Our weekly range, and then from there, this is the area of the monthly range that we need to take out. So to mark up structure on the 4-hour, we can clearly see that we had a break of structure. Boom, break of structure. We left quite a number of imbalance here. Price has not mitigated it yet. Pushed up, broke structure, right? We left again imbalance here, which price then came in to fill the 50% of that imbalance. So if I can just zoom in to this zone here for you guys so you can see that. If we take from the low to the high of that candle, we can see that price came into the 50% level. Came into the 50% level over here, mitigated that level, mitigated the imbalance, and then continued up. So we don't need to look at that for future. We have mitigated that zone already. So another area of interest that we can look at, right, is the following. We have a break of structure, right? So we're just marking up our highs and lows. Boom, boom. Price created that small retracement to the upside, and then we have a nice low created there. So we, for a moment in time, we were stuck in this range consolidating, right? We were in this range consolidating for a while. We just recently broke out, so this becomes our new higher high and higher low. Let me just change that quickly to a line. Okay, cool. So now what do we see? We see liquidity resting here, which we need to sweep, right? Why did price come into the zone? Because once we broke structure here, we had a nice We had a nice area of imbalance here. Excuse me. We had a nice imbalance area here, which price came into, stayed in for a while, and then pushed up. All right. And then we can see that we did break structure to the left on a lower time frame microstructure, which caused price to come in, mitigate this order block here, and then continue this expansion to the upside. So in short terms, we are just going to mark up the zone as mitigated as well, so that we do not look for it in the future. So right now we've got our current range, got that break of structure, right? So to get to the 1 hour, let's see if we can find a nice clean setup on gold. So we just cleaned liquidity here, equal highs, which you guys know as double tops or double bottoms. We've swept these highs, and now all we're looking for basically is for price to fill all this imbalance, guys, all the imbalance here, fill that imbalance, come in into our demand zone, which is here. So this is what I'll be looking at for gold. And then I also like this area here. This area here is also quite interesting. So for a continuation trade on gold, I will be looking for these two areas. Obviously, what confirms my entry point, right? Has price taken out the lows of Asian session here? Yes. Is there a demand zone that creates an expansion? Yes. The reason why I'm looking at from this break of structure here, let me just explain this to you. From this break of structure here, we have a nice demand zone here, right? That has been unmitigated with a imbalance here, right? This order block has caused price to push up. So we don't look at this order block anymore because it is mitigated. So we also have another break of structure to the upside here, right? And we have our demand zone. So we've taken out the low of Asian session here. So clearly price does not need to break these lows at all because we've swept the liquidity on the lower time frame. So I'm either looking for price to come into the zone here and then for a continuation to the upside, or for price to come into our extreme premium level, bit lower. I have my stop loss just below this candle. For here, I'll have my stop loss below this wick, and then just target the previous highs, right? So obviously, if price starts to, if I want to get in and scalp, I'll obviously go into lower time frames and then start looking for trade entries within these regions here, right? Let's see if we can actually find that on the 15-minute time frame. So we clearly have a break of structure, right? So this was our break of structure to the high. Break of structure to the high. We had a nice impulse move, another break of structure to the high. Right, we have another break of structure to the high, and then we have a break of structure to the low. So within these wicks, where is our order blocks? So we can clearly see that we've got liquidity that needs to be swept, an Asian session high for today which needs to be taken out, right? So it's either two things. We are gonna come into a order block on a lower time frame, probably like the 5 minutes. Let's go see if we can find the order block within this region. Sweep liquidity here, right? Sweep liquidity, and then possibly come into the zone and then continue down. If that does not happen, right? Because we have this break of structure here as well. If that does not happen, we're gonna find the 50% equilibrium point, drag this out, right? Drag this out. Wait for price to come into the zone, mitigate the zone, and then take buyers up. So we just have to wait and be patient, but I do like this zone more in terms of buyers, but if needs be, I will take shorts if price comes up into this zone. Let's see the 5 minutes. Just delete this. I will take shorts in this order block here, because if you can see nicely, this order block caused the displacement to the downside. So I will like to trade into my areas of interest. So I'll have my stops just above here and my targets all the way down or at the Asian low, depending on what price does within London session, which is about to play out in a few minutes. So that's just a basic overview on gold. And then we have currently right now we're looking at NAS 100, the Nasdaq, which is everyone's favorite. So Nasdaq is looking quite beautiful, I'm not gonna lie to you. I'm basically looking for price to come into this order block that caused the break of structure to the left here. As you can see, we broke structure, then we had price mitigating the imbalance and then continuing the trend down. So right now we are taking out the buy side liquidity here. I'm targeting the supply zone on the higher time frame for a move to the upside. So this is the daily time frame. To get into the 4-hour, the 4-hour time frame is very simple. We have a nice expansion to the upside from here, right? Nice expansion. We have our zone below our equilibrium point, which is here. I'm looking for price to come into that zone. I'm looking for my stops just to be below this candle here, and then target our supply zone in the daily time frame. So that's what I'm looking at right now on NAS 100. Once we target the zone, I will be looking for price to take out all the sell stops below here, come in, fill all this imbalance, and then mitigate this order block that we have here, right? So I am looking for this right now on NAS 100. To get into it, that is all for the day. I'm not going to analyze US30 right now or Bitcoin or any cryptos. But this is my crypto watch list if you guys want to check it out. I'm looking at Bitcoin, Ethereum, Doge, XRP, Shiba, and a few others. My stocks that I mainly focus on: Tesla, Amazon, Apple, and Nevada. So I hope you guys enjoyed this short video. Okay, it's not short, but I hope you enjoyed the video, and we'll be looking forward to hearing any comments and see if you guys catch any of these trades. I will be updating this video as price goes, but in the meantime, I am just looking at trading probably next week if price doesn't meet my areas of interest in time. So besides that, guys, I hope you had a good trading week. I hope you did find value in this video. I will see you in the next video. Thank you.